Hey guys, it's Harry here, back again with another video. Now, do excuse my voice, we're on the mend, we're getting better, but really wanted to produce this video because I thought it was really interesting. And also, we've got storms in Texas as well, so it's all going off in this video, but we're going to cover a really interesting topic. Why you should not always back the second asset class when you're investing. So think of Bitcoin, ETH, gold, silver, all these things. We're going to get into why, it's common, right? Oh, the second asset is going to have higher returns, it's higher beta, all these things. In this video, I'm going to break down why that isn't always the case. And remember, this is according to my own research. It is, not financial advice. If you want to get a better understanding of my thinking, of my approach, please do check out my free newsletter. The link to that will be in the description. So first we're looking at gold and silver. And I think, to be honest, think of the Olympics. There's gold, medalists, and there's a silver medalist. And that's for a reason. We look at the last 50 years. So all this data as well is of the time of recording. Gold has roughly done over 2,000%, around 2,270% over the last 50 years. Whereas silver has done about 1,000 less percent really in that time. Now we saw, and what we will talk about this, kind of going further into it, but what we did see in kind of late last year, early this year, 2026, was gold had a huge run, and then so did silver. But in reality, if you were just accumulating gold that whole time, you would have done loads more. But in a 2-month window, you would have thought silver was the better play. So silver does seem to have explosive short-term moves. So in 2025, as I mentioned, silver, huge move, outperforms, a lot of things, but they're in short times. And it's to do with rotational flows, which we'll get onto later on. And gold is gold. Remember, think of the metals. Gold is gold, silver is silver for a reason. People view gold as the flight to safety. Pension funds hold it. Macro hedge funds, trade gold a lot. It's the biggest asset class. But I think people easily think I should own silver and gold. And really, this is telling you just own gold and own maybe other things and be more heavily diversified, but be more concentrated in gold. And this, I think, does prove that hypothesis. It may not be true forever. It may change. Silver may catch up, but 50 years is pretty good data, and over 1,000% is also pretty good as well, or around 1,000%. Here we have, so we've also got Bitcoin and Ethereum, a pretty, similar comparison. So at the time of recording, these are the rough prices. They're obviously not to the exact tick. But as you can see here, Bitcoin, again, has massively, outperformed. And then, it will have lower drawdowns as well. And, the best explanation of this is, you could argue ETF flows, which are put on there, but it's also ETH BTC. If you look at the ETH BTC chart, it looks like it's just going to keep making lower highs. So what you've got there is essentially, usually you would have ETH versus dollars or USDT or USDC. That is ETH versus Bitcoin. So when Ethereum outperforms Bitcoin, it will go up. When it doesn't, it will go down. And it looks like it had a big outperformance, and that looks like it's done. May change. Tom Lee may be right on Ethereum. But as you can see here, Bitcoin and Ethereum, again, not having quite, so much, easy gains for the people who said, what, I'm just going to back ETH because it's got more beta. A lot of people would have done that in last cycle, which maybe would have left Bitcoin under-owned. It's really common in cryptocurrencies. You have, Bitcoin, it's had its massive moves. I'm going to own ETH. I'm going to own XRP. In reality, Bitcoin, if you want to get a good view, you can chart them against each other. But ultimately, Bitcoin is still, if you are into cryptocurrency, is still the better one. It's the brand. It's if Bitcoin dies, more than likely crypto will die with it. You could argue maybe stable coins will stick around, but yeah, Bitcoin versus Ethereum. Then again, this proves you should just own Bitcoin and not Ethereum. You should own gold. You should own silver. You could argue these two are the same, but in cryptocurrency. And what you do have with a cryptocurrency, and this is what I wanted to talk about, is rotational flows. So you will have, typically, people talk about this a lot, Bitcoin runs, and then the wealth effect goes down into altcoins and so on. And that does happen. We've got an example here in Nvidia and AMD. So you had Nvidia do a huge run up over the last 3 years. Now AMD is, where it's at. Essentially, similar sort of companies, similar sort of narratives, in that kind of like memory, AI, that kind of stuff. But you've got people who made loads of money in Nvidia are now rotating into what's next. And it's really hard to keep up with these rotations. But this is, again, another example of gold, in this case, Nvidia, is probably your better long-term investment if you want to buy and hold for the longer term. But if you want to be more rotational, you're going to get really good outperformance when it does come to the silver. So Ethereum had a huge pop in 2025 summertime. Silver again had a huge pop early 2026, late 2025. AMD now it probably looks like it's topped out for a bit, who knows? But you've got rotation into number two, and that often can give you an indication of where we're at with the cycle. So that can often tell you that we are in late stages, the laggards are catching up. When you see something that hasn't moved for ages, and that's moving, and the majors are slowing down and being outperformed, that's a case of, okay, cool, we are towards the end of the cycle. If something's gone up for 3 years and it's stagnant, and something that didn't go up for 3 years but it's going up huge and aggressive, tends to be a rotation of capital. Again, you've got to think of it, gold, silver, you could put this almost in anything, but this is a really good frame. You've got, this is the stock market bullish now. You've got loads of majors that are like flat for the years, and you've just got all this rubbish that is going up loads. So you've got to be really mindful of those rotations from your gold and silver assets, and it's the same for stocks, cryptocurrencies, and all that. Here I've got, so going back a slide, we've got the S&P 500 versus global stocks. Excuse me. So SPX has actually outperformed VT. Are we due to a reversion on that? Who knows? I mean, VT does hold a lot more stocks in it across different countries, meaning you own everything. But those who are mostly, in US consistently did outperform that. But is a reversion due? You would argue it is. You see the stuff about, America being incredibly overbought and all that, all that stuff. I would argue that that probably is the case now. A reversion is going to happen. But another good example of actually, you could argue VT is gold. That's the gold standard of stock market globally, and this is silver. And you could argue it, the other way around. I just want to put this in because it kind of contradicts some of the things I mentioned, because you always want to be in investing, in putting your money into something. You want to be thinking of both sides, right? So you want to be thinking of the positives, the negatives, the different paths, and this kind of contradicts some stuff. Hence why I wanted to put it in. But again, will we see some rotation out of SPX into VT over the next couple of years? That could be a potential factor. Who knows? But we can only wait and see. Another one we've got when number one changes. So this is your gold and silver swap. So you could argue BlackBerry. Everyone had Blackberries, 20 years ago. BBM was the thing, if you remember. Then Apple launched the iPhone in 2007, and then it absolutely, just demolished it, kind of there and there out, really. Probably ever since the 2008 crisis. So you've got to be wary that if you're investing in the number one, it may not be number one forever. So that means, BlackBerry, they're going to be around forever. They're the best phones. There's no forever trades. Something's probably going to come along eventually and take Apple's crown. You've got to be thinking about all of these different types of things, all these different types of narratives, and putting them together. You've really got to be kind of thinking about that. So this was just another example where gold and silver actually swapped. The best phone got replaced by something better. You could argue Apple, better brands, better story, better ecosystem fundamentally, hence why it overtook BlackBerry. Touchscreen, again, huge. And it's just kind of gone ever since there. So that's a great example of where actually things have swapped, again, contradicting some of the things we talked about. So you've got to be asking yourself, okay, cool, I'm going to invest in software stocks. I'm going to invest in AI stocks. What's the gold? What's the silver? What is the major big player? I'm going to invest in, car company. Okay, cool. What is got the highest market cap? I'm going to list them out. And you kind of just got to think, 5 years in front. Okay, cool. Where do we go from here? What's going to be the major? You've got to just be thinking about these things. That's what I would be, really trying to be conscious of. But you remember, gold and silver, they can swap, but typically in some things, that the main brand and the main story will stay there for a long time. And to be honest, I can't see anyone catching Apple anytime, in the phone space. Someone obviously may know better than me, and there may be the ultimate trade out there, but that's definitely something to consider as well. So the verdict: gold, beat silver by 1,000% over 50 years. Bitcoin was better than ETH on corrections, and it's performing. If you look at the EPTC chart, again, that's a really good one to look at. SPY or SPX outperformed global. The global diversification. So that's again something you've got to be consider of. It's like, okay, cool, this has outperformed for so long. Are we due a reversion? But you've got to have a plan and think about it and come up with something that you're not going to be disappointed with in 5 years' time. Rotation into number 2 typically is a cycle signal, not a new trend. The end of the cycle comes when the rubbish is pumping. Again, AI, great thing. A lot of the majors are flat, a lot of the majors aren't doing much, but there's these random stocks, Micron, AMD, no one's heard of, and they're going like crazy. But number 1 can change. So think to yourself, okay, cool, I want exposure to this sector. What's going to be there in, I can fall asleep, and what's going to be there in 20 years' time? What do I want to be interested in? But you've got to be wary of this could change, and then you've still got to have an invalidation. So what I would be thinking of, if you're going to apply some of this stuff or do some research on the back of it, okay, cool, I want to add something to my watch list. I want to start investing in something. What's going to be the gold and what's like the silver, the bronze? You can go down the list, and okay, cool, that's going to be that. These should perform better on corrections. If the rubbish starts pumping, and let's say the major one is flat, okay, cool, this cycle or this bull market over the last couple of years has probably been done because it's happened before. You look at crypto altcoins in late 2021, AI stocks now, and then you've got to think, right, where's the invalidation if this is not going to be number 1? Those are the things I would really be thinking of. As mentioned, guys, if you want to get a really good understanding of what I'm thinking, and where you don't have to listen to this stupid voice and you can just read, check out my free newsletter. The link to that will be in the description, and I'll see you in the next one.